Bounce underway. Hope you had a good day out there today, and we are now looking at what is the size of this daily bounce on all individual names, on all individual sectors. Is it a big enough bounce where we can be looking for an equilibrium to be the most likely scenario, or is it a small enough bounce that a downtrend is going to be the result? We don't have enough information at the moment. What we do know is the bulls definitely need a bit more proving and a bit more follow through from what we've seen today. So this upper wick on SPY is misleading here on TradingView. The high of yesterday was just above 338. So we have that resistance and we broke that level. So it's clearly a daily bounce underway. If this were to be the top of the bounce, a daily bear flag would be possible. So if we come back tomorrow with a red day, it's a red flag on this bounce. What I'm going to be watching overnight tonight is the S&P 500 futures and the Qs futures, because the 4-hour time frame right now is setting up for a possible inverted head and shoulders with a left shoulder. This is the most important resistance for me. Here's our head. This is potentially our right neckline, and we're looking for a 4-hour higher low and trend change. So best case scenario for the bulls, in my opinion, overnight tonight, set this 4-hour higher low in a bull flag fashion, and then tomorrow open, break the highs of today during regular trading tomorrow, and see a 4-hour trend change confirmed, because that gives us daily bounce follow through. So that's best case scenario. Get that 4-hour higher low out of the way, confirm the trend change tomorrow, daily bounce follow through. So I personally today didn't get the scenario that I wanted. I talked about in the video yesterday, I wanted a gap down open, I wanted weakness, and I wanted to be aggressively buying that weakness. That's the setup that if it came to me, I would have been aggressive, using more capital, and I would have been going for weak makers. We then started this morning, and I got a scenario that I didn't want. I pretty much got the third best bounce scenario, which is, you know, if you're not giving me my first or second best choice, it's not what I want. And what it was just a bull move with a slow and steady trend, slow and steady uptrend for the morning, but not really a clear support level to be going off of, which made me more cautious. So rather than going aggressive and getting a home run kind of day, I just went with my standard base hits, and that was that. So congrats to the bulls that did get more significant of a bounce. And my cautious trading style these days is when I'm wrong, I leave money on the table. I don't lose money. I obviously lose money at times, but when I'm wrong, I'm leaving money on the table for the most part. And that was the example today. Again, nothing wrong with today. Got a day maker, but obviously there was opportunity for some more if I were more aggressive. But didn't get what I want, so that's that. So we're going to be watching that overnight chart, IWM. So it's the same thing for everybody. Some names, some individual names. Let's just look at a couple examples. So Amazon, significant daily bounce compared to the recent low. And again, if you want, for me, it's visual. I've been charting for over 10 years at this point, and I look at this chart, and I know whether it's made a significant enough bounce to be negating a bear flag, high probability, or to be a bear, highly probable to be a bear flag. And if you don't have that view from experience, you're using the fib levels. And again, that's why I've used fibs recently to try and explain that, where you're looking at the size of the retracement. If you're retracing 30 to 40%, it's a possible bear flag, or less obviously. And if you're retracing 50% or more, you're then looking for the equilibrium. So use the fib tool if you can't just visually look at it. But so Amazon, a more convincing bounce. And we might as well just use the fibs to explain it. The bounce at this point is about 45% or so. And then I look at a name like Facebook. This bounce hasn't even started. It's a daily inside bar today. Very weak. There are a bunch of individual names that are very weak and potential daily bear flags. Look at WMT. That's a daily bear flag. If we don't see any more bounce than that, look at the size of the retracement. Bounce got to that less than the 382 level. It's a daily bear flag. The burden of proof is on the bulls to prove to us that that is not a bear flag. But if we see red in the market tomorrow, the weaker names like WMT will be possible daily bear flags. So keep that in mind as well. For IWM, bulls want more follow through because this is a potential daily bear flag. If that's as much bounce as we see, a lower high and lower low could potentially happen. Remember what I said in a recent video to end last week. I am less concerned about the size of the initial dump where the bears sucker punch the bulls. Now the bulls are ready for it. They've they've gotten their wits about them and they're ready to fight. And if we see a lower high and lower low, that is very meaningful to me. That's the bears following through. That's entering a daily downtrend. And again, that's the bulls saying, number one, this is the bulls saying, uh-oh, what's happening? All right, I'm going to buy the dip, or I'm going to hold on to my positions and we'll bounce right back. Wait a second, we're dropping to lower lows, spike in fear, spike in uncertainty, and a daily downtrend for the bears. So that is the most important thing for me here. Can the bears confirm a lower high and lower low? And the side, tomorrow's a very important day because if we get significant follow through, we look for the tightening range. If we are red tomorrow, there's that potential for that daily downtrend. QQQ, could it be a daily bear flag? Absolutely. Bulls have to prove it by seeing a few more percent over the high of today. Again, bulls want to get to that 50% retracement mark. I need to see these bulls get 285 and above to be negating this bear flag. And one thing that's been missing for me is bull volume. And that made me miss some of the bull action today because I looked at this 5-minute time frame for QQQ and I said, all right, 5-minute equilibrium, tightening range, and look at our bull break candle. Biggest green candle of the day, volume not comparable to the start of the morning. And for me, that was a red flag. Now, in hindsight, that was an incorrect signal. We got plenty of follow through. But that's what I'm looking at on the daily time frame. We need to see notable bull volume on this bounce. Otherwise, bear flags remain on the table. XLV, solid bounce. Could it be a bear flag? Yes, it's possible, but we got an hourly higher low trying to form at the end of the day, and we would have to see a red day tomorrow. If we get green tomorrow and break the high of today, odds of a bear flag greatly diminish, which is why the highs of today will be key tomorrow for all individual names and sectors to try and negate possible daily bear flags. XLF, daily inside bar, didn't break that range. If we get a bull break of 25.07, we'll look for a daily lower high compared to 26.01, but no real daily bounce taking place at this point. There were periods today where QQQ and XLF were inversely trading to each other again. And again, when everything's dropping, money's leaving the market. When they're trading inverse, money is shifting around within the market. So we're going to keep an eye on that. But as of right now, not a lot of clarity for me on the financial sector's daily chart. We're just watching, can the bulls hold the weekly uptrend, 24.23 key support. Biotech sector, inside bar bull break. Again, any green, we're going to start negating the bear flag. But if that's the top of our bounce, a bear flag is still possible. So bulls definitely want more follow through tomorrow. SMH, same story. Again, look at the bear volume and look at the bull volume. It's not impressive for me. I need a green day and increasing bull volume to negate the possible daily bear flag. The VIX tilted its hand again. That's now both directions. We were talking in the video yesterday. Maybe that's a little bit of a clue because the VIX closed so weak comparative to the market closing so weak. And that was a bit of an indication to be watching for that bounce, which we got. So bulls started their move before the big market pullback, and bears, I should say profit taking, started significantly before the broader market bounce started. We are looking for the VIX to give us a daily high or low. Bulls ideally want to hold that exponential 12-period support, and we'll see if they can do it. Hourly trend change back to the bulls needed. The dollar started pulling back. So we're watching that for the metals, and we still have a pattern of a higher low every day the last 6 days. If that pattern breaks, we zoom out and we look for a daily higher low compared to 91.75. And we know we need to confirm a daily trend change for weekly oversold bounce follow through. And again, it's the same thing as the opposite. How significant is the pullback? Does it favor continuation and a daily trend change? Or is the size of the pullback significant enough that we look for a tightening daily range? Gold, beautiful follow through off our daily higher low. So again, bottom fished the GLD position. And I will move my stop loss up now on GLD. When I made my entry, my stop was under 178 to give a good bit of wiggle room. I'm going to move my stop now to under 179. Now that 179.04 and 179.02 is a double bottom. So in the end, my risk is $1 and my reward is already $3. That is how you put yourself in favorable risk to reward scenarios. And that's why we're still even in this equilibrium. If this equilibrium breaks bullish, my reward is going to be 10 times what my risk was. And one way that I trade often, if I want it to be extra protective, because it's a swing trade position, it's smaller, so I'm not going to do this. If this were a day trading position and I'm playing within this equilibrium, and I want to hold a position, sometimes I'll just sell and lock in my profit knowing a daily lower high is most likely to remain in the tightening range. But if I want to hold until the break occurs, I sell half right now. That's $3 gain on half a position. That drops my break even to 177. I am now risk-free. I cannot lose on that trade if it were day trading. And I then wait and see, okay, can we break bullish? And I gain significant profit on my second half position. And if the answer is no, we break bearish, I still win. And that's the way I like it. Gold, daily high or low set. Anything under 1993, just a daily lower high. And probably going to stay within this tightening range into next week with 2 more trading days this week. Silver, less clear. Battle for 26 psychological support. We broke it, but quickly got back over it. I like the gold chart much better. It's much more clear. And miners, big day today with both gold and the market going up at the same time. We know the miners move their best in either direction when both the market and the metals are moving in the same direction. And miners resistance is 41, make that 43.13 on GDX. And we'll see if that resistance is in play tomorrow. Oil. Bounce starting, not surprising with the broader market bounce. Daily inside bar, if it breaks bullish, we look for the daily lower high to be set. If it doesn't break bullish, then we don't have a daily bounce taking place just yet. Bears are going to be watching for this daily lower high, you better believe it. Natural gas. So we got the daily bear break and a lack of bear follow through at this point. It is keeping the weekly consolidation healthy. There's no red flags right now. And the bulls would love to see a green day tomorrow. Again, you always want to see a downtrend confirmed straight into a bounce if you're looking for healthy, longer-term consolidation. And it's the exact opposite in the other direction. If you're bearish and you want to see a weekly lower high, you want to see a daily trend change with no follow-through. So let's say I'm bullish stocks and bullish metal and crypto, and I want to see the dollar give us a weekly bounce. That means what I would want to see from here is a daily higher low, a daily higher high, straight into a pullback. When you change the daily trend with a lack of follow-through, you zoom out and look for a weekly bear flag. And a weekly bear flag on the dollar is possible at this point. Question for me on the dollar for the next week is, can the bulls confirm a daily trend change with a clear higher low and higher high to keep that weekly bounce going? So that's where we stand. I had a little lesson on a Tesla trade at the end of the day. So Tesla was a double top on the 15-minute time frame. We had key resistance at 356, and we got up and we double topped at that level. So then said, all right, I want an entry if 356 breaks because the bulls have momentum, the market is strong, and I will then be looking for a move to the high of the day if that level breaks. So I saw the rejection on the 2-minute time frame. I patiently watched, and I bought the bull break of 356 breaking, and I probably got filled 356.50 or something like that. And I used a larger position than normal because I don't generally like buying bull breaks, because where does my stop loss go? It's usually not close by, so it's usually more risk than I like to take on. So I used a bigger position with the intention of instantly selling half. If I enter bullish at 356.50 and I can sell half at 358 right away, my break even instantly goes down to 355. That gives me more space to work with on that green trade. As soon as we saw the bull break, we rejected from 357. And there was a decent amount of bear volume on that rejection, which stood out to me. I said, uh-oh, that might be a fake out, because there's another resistance, 358, from the morning back there as well. So instantly I say, uh-oh, we got a bull break of a double top with no follow-through, with notable bear volume, with a clear resistance just $1 away. And I exited with tiny gains, pretty much break even. And then we set a 2-minute higher low, and then got the bull move that I was looking for initially. So the lesson for me is, trust your exponential moving average support. At that point, it was grinding and holding for a solid, almost an hour. And after the rejection that scared me, we pulled back, we set a higher low at 355, and then we got the move that I was looking for. And then the bull volume came in. It needed that one more little higher low to get going. So that was a little bit of a lesson for me. Trust the EMA if it has proven to you in the recent past that that is the level to be watching. And we'll see. Tomorrow's a big day. Can we get bounce follow through, or are these daily bear flags? What does the futures chart do overnight? Can we confirm the 4-hour trend change? Lots of questions. I'm not convinced by these bulls. Why I like the flush bounce, what I wanted to see, gap down open, extreme weakness, flush it down, V-shaped recovery initially, is because you generally see enough bull volume on that initial V-shaped recovery where you're confident saying, okay, that's a big enough bounce, that's big enough bull volume that our bottom is set for now, and we're going to get some solid follow through. And this current bounce setup is not giving me that. Doesn't mean we can't see bounce follow through, it just means I am not comfortable with trusting the bulls right now on this move. So for me, that means just remaining patient, and I don't need to be in swing trades, and I don't need to be going for home runs. They're nice, but if I'm not confident, I'm going to stick to my little base hits and little day makers and wait for a higher probability setup that I am confident in. So I hope you had a good day out there, and I hope you do good things, and we'll see you tomorrow. Got some monarch butterfly caterpillars on their food, which are these milkweeds.